2.6 million ounces of deliverable silver appeared in the exchange vaults overnight. The vault drain narrative says that shouldn't happen. Here's what we're checking today. First, why yesterday's vault inventory jump isn't what the squeeze crowd thinks it is. Second, the macro setup after April's hotter inflation print. And third, the one price level that matters this week. For 5 months running, the loudest story in silver has been the same. The exchange vaults are emptying. Registered silver is running out. Delivery squeeze is imminent. You've seen it on Reddit, on YouTube, in research notes from at least one bullion firm and one digital asset research desk. Here's what the data actually says. Yesterday, registered silver in the exchange vaults didn't fall. It rose by 2.6 million ounces, one of the largest one-day jumps we've tracked this year. Total deliverable pool is now 84.05 million ounces, up more than 4 million ounces over the past 3 weeks. Coverage just climbed back toward 15%. But here's the part the narrative misses entirely. About 80% of yesterday's jump, 2.09 million ounces of it, was an internal accounting move at a single vault. The depository is called Asahi. Metal was already sitting in their warehouse. It got reclassified from one inventory bucket into another. Same building, same bars, different label. New silver actually arriving across the entire system was under 1.5 million ounces. In other words, the vault didn't fill up because more silver showed up. The vault filled up because the operator did the equivalent of moving inventory from the storeroom out to the front counter. Same building, different shelf, same bars on the floor. We're not going to name who's pushing the drain narrative. Point isn't who said it. Point is the math. Structural backdrop is real. Bulls have been right about that part. The Silver Institute's World Silver Survey, released in April, describes silver as having entered, quote, an era of reduced stocks. 6th consecutive year of supply deficit. 762 million ounces drawn from above-ground stocks since 2021. Yesterday's specific print isn't what proves the imminent squeeze case. Vaults aren't draining. They're reclassifying. It's not the same story. Quick aside, if you want these structure checks daily, subscribe and turn on notifications. Step back from yesterday and look at the wider picture. Registered silver was around 77 million ounces in mid-April. Today, it's 84.05 million. That's a meaningful rebuild, but it didn't happen because new silver got mined and shipped to the vault. It happened because operators converted silver that was already in the warehouse into deliverable form. That's the system responding to delivery pressure the way it's designed to respond. Here's what the data actually says about the macro side. The Federal Reserve's preferred inflation gauge came in yesterday at 3.8% headline, 3.3% core. Both are the highest readings in over 2 years. New York Fed president said yesterday he expects inflation to stay close to 4% over the next few months. Bond market is now pricing roughly a 50% chance the Fed hikes by December, not cuts. That's the cross-current silver investors have to hold in their head. Silver has a real industrial demand leg from solar panels and electronics, and a real monetary demand leg from people who want to hedge against inflation. The 10-year Treasury is still paying around 4.5%. In other words, every day you hold silver instead of bonds, you're giving up yield to own a metal that pays nothing. Yesterday's vault paperwork doesn't change that math. Level to watch this week is $74 on silver. That's where the metal broke down on Thursday after the hotter inflation print and Iran headlines, and where overnight buyers stepped back in. Hold 74, and yesterday's reclassification story stays a footnote. The system is working as designed, and the squeeze narrative loses urgency. Who's 74 with the dollar climbing and yields ticking higher, and the squeeze narrative loses its physical market anchor. Today's exchange report will tell us whether the same conversion mechanism repeats. Watch the price, not the headline. Structure checks like today's are what the Silver Catalyst newsletter does every issue. Depository level math, explained the way an engineer would explain it. Silver2026.com. $1, 2 weeks of the newsletter, plus the book. If you've heard a silver claim you'd like us to verify, drop it in the comments. That's today's check. I'm the Silver Engineer.